Hey guys, it's Sunday, a little afternoon, February 28th, 2021. I want to run through a few things here. Usually going to start out on a negative note, but I did get smashed on last week with holding a large position, and I haven't taken a hit like this in years. I mean, it was big. I'm not going to go into details, but it kind of knocked the wind out of me. I had a position in SOS, and normally not my style of stock to buy into, but I did a little due diligence on it. I liked actually some of the management team from the United States. Had some good credibility. One guy, I believe, was like a naval ambassador or naval, I don't remember what, admiral or something, or ex-Navy guy. And, Morgan Stanley, I believe, did underwriting. Not that's just bulletproof, but I liked where it had retraced to. I mean, it was up as high as 15, 16, pulled back into the sixes. I took a large position. Then Hindenburg came out with that hit piece, and I got torched. I sold half the position. It kind of bounced right off a Fibonacci level at the 422 that I was looking at, but I digress. Let's look at the IWM first. I believe the IWM's topped out. I believe right now is not the time to be in momentum stocks. You can play them, but I believe that the market does not move on fundamentals alone. I think the market fundamentals really don't matter in the intermediate to shorter term. It's perception of fundamentals. It's time and energy. Over the long term, fundamentals 100% matter. You see stocks like Apple and Amazon that continue to produce good earnings. Microsoft, over time, that energy continues to push these stocks higher. In shorter periods of time, you look at stocks like Plug or Nikola or whatever, they've had their days where that energy was based on perception and the pile-on effect, obviously, and movement technicals, where people see a stock break out of a certain level and they say, okay, that's my support. They pile on to it. You get this, extension to the RSI into the 80-85, and then fundamentals will start to come into play longer term as the news comes out, and the stocks start to depreciate and deteriorate. The energy starts to change into a different form, and greed becomes fear, yada, yada, yada. And then that's what breaks stocks over the longer period of time. Like I said, in Nikola, Workhorse, I think it's the same thing. I would be in a void. There's only 3 stocks that I like, and I don't want to digress too far here from the macros we're looking at, starting with IWM, but I like BYDDF, Boy Yellow, David Foxtrot in the EV space. I do like Fisker. I wouldn't chase it here. I like QuantumScape, but I believe that in this type of market, if you have patience, you'll be able to get lower prices, because I do believe we've topped out in the intermediate and short term here. And I'll show you some targets I'm looking at. So let's start with IWM, and then I'll get into Norwegian Cruise Lines and a SPAC that I like, and what I'm probably going to do with SOS. And maybe we can look at Bitcoin really quick. So I'll try to be fast. Longer term, this is my consolidation time frame on the IWM, where it really started to break out. We had this long movement from like the mid 2006, I believe it was, all the way until like 2010, where the IWM small caps did absolutely nothing. And then I believe we had a longer term directional change right in this area here, and I'm going to zoom in and show you why I think we've topped out here. Remember, this is all the way back in 2010. You have this yellow line peak here. You go retest this lower trend line on the intermediate term. You push through there, a little bit of a kind of a peak above that, and then you have this precipitous drop where you retest this trend line again for the 4th, 5th, 6th time. And then here you have a massive bear trap within this circle here, where things look like you're breaking down again for a retest of this longer term rectangular channel. And what happens? We go back up, we retest the trend line here, and come back in to my Fibonacci 0, where everything began, I believe, right here, which would have been in June of 2011, and we never look back. So I look at energy. I don't always look at bottoms and tops of time frames and candles, wicks and tails. I believe this line of energy was the battleground. You probably have a 50% Fibonacci from top to bottom, somewhere in this area, maybe close to it. And energy is trying to sort its way out, and it sorts its way out to the upside here, and we never look back. So this is ground zero, and I think you'll see how this comes into play later on as we move along the trend line here. We go up and we kind of have a 50% longer term agitation along here. The last candle break before we pull back to the 23.6, and then we right ourselves again, and we have a nice strong move to the upside. And you can see as we continue along here, and then COVID hits and the bottom comes out right here. And that's a double top 100% area. And you can say, well, Henry, it's not really hitting the top there. You're actually showing it pushed through the 100%. Well, like I said, I don't always use tops of candle areas. What I do use is directional changes. So if you look within that time frame on the IWM, you'll see that we were still in an uptrend here, and this just happened to be the energy level. You can push through areas of energy, but you're overbought. They pull back, pull back, pull back. This is a big bull trap here, in my opinion. And then you retest the 100% Fibonacci on the longer term, and then we fail. That's kind of the last candle area. And then we drop all the way down to the 61.8 in between, and it kind of rights itself. And then we go back up and retest that area. Actually, that's when COVID hit, and you had the big pullback from the COVID back in March. And then where do we end up? The 23.6. Almost spot on the 23.6. I got my COVID dates messed up, but almost spot on there on the 23.6. I mean, literally, you can see how close that is. And these are important areas because, once again, now we go back up to the 61.8. You have a little bit of a push through. You keep testing it. You kind of pull back and then sort of retest it again, and then it's off to the races again. Remember, these numbers don't have to be exact to the penny. But where do we end up at? We have this huge rally, which it's funny because the smalls had been underperforming the Qs and the SPY. You have this really high trajectory move, and where do we touch? The 161.8. And once again, we push through because you can do that. Overbought, energy, bull traps, and you'll see how we break through the 161.8, and that's the last area we've had. And now we're creating another wedge in here that I believe will break to the downside. It doesn't mean we can't rally first. I just think that we've hit the extension, and then the higher you go within your Fibonacci extensions, the harder it is to just consolidate and take another leg up. I know interest rates are having a lot to do with that. 10 and 20-year treasury, look at the move in TBT that we've seen recently, and that kind of puts things on guard. So what happens usually in this time period is that you have more sellers that want to exit and create energy to the downside than you have buyers at the lower end that want to create energy to the upside. And once that sorts itself out, you'll start to drift down to different areas where energy over the longer period of time will start to take into account the fundamentals that I think are pretty solid here. I do believe that obviously there's a speculative bubble area of the market, but I think that really is kind of a little sideshow to the fundamentals that are turning a little bit more positive, given this horrible COVID thing that we're coming out of. So triple Qs, same thing. Look at the QQQ. Longer period of time, we have the same type of movement. Big Fibonacci movements from breakout areas, retests of areas on ground zero. Look at, we touched that point where I put as ground zero energy almost to the penny there again. And what do? We rally up. You kind of get through the 61.8. You retest the 38.2 almost to the penny, right in there, back in October of 2019, I believe. And then you go rally up to my 100%. You fail there on the COVID. And then what do again? We extend ourselves to the 161.8 on the triple Qs. Now, remember, on the triple Qs, a lot of people were posting videos on YouTube, market crash, watch, and what happened to those guys? They're all gone now. They're all gone because when we rallied off this level here, they were saying that the market kind of broke within this time frame and that it was time to get out, that it was a massive speculative bubble. And you can kind of see, the trend line was right along here. See the trend line there? That's the line that they said broke and it was time to get out. You can see right here, nice little trend line. And we broke in here on big volume. Look at the big volume there. But I warned that I didn't think that was actually a break and to not go short. In fact, I said pretty much hold strong because I think we're just changing trajectory. That's what I told my subs and people that follow me. And you can see the pivot break here was actually the beginning of the breakout. We retested it here, 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 and here. We created a bull wedge and then we broke out once again. So we have had similar periods of time where we've had these breaks of the trend lines. We saw it before, Do I think the same type of configuration is going to form like this and then move up? I think it's more difficult the higher you extend within the Fibonacci ranges. So I'd be a little bit more concerned, and I do believe that we're going to go down and retest the 293-ish area on the triple Qs. Will that happen all in one day? No, because I think there's a lot of market participants that have missed a big portion of the move and would like to get back in lower levels. I just think the energy of the sell side is going to be a little bit harder to overcome when we push up than the buying energy on the low end to push through on the way down. So like I said, time and energy is usually what moves markets. I believe the pivot area here, right in this 294-ish, 295 area will kind of hold. I think we might extend past it and slightly retest this trend line here, which depending on the time frame could put us around 290, 291. But that's a big move from where we're at right now, and it's not going to happen overnight. I don't see a lot of huge, heavy selling. This market's usually quick to correct. Now, if things change, I'll change my opinion. But for now, I'm cautious. I think it's time to avoid momentum stocks unless the theme of the stock is more powerful than the theme of the macros of the market. So I would expect this little triple bottom to fail. Sorry to say that, and I know a lot of people don't want to hear that. You look at, we have 2 days red, 2 days green, 2 red candles, 2 green candles. You'd say, oh, it's a little bit of a neutral battle there. But once again, when you look at something like a Hakanashi candle that takes into consideration volume, which really is more important, it's all red, unfortunately. So I don't want to be Debbie Downer, and obviously the market could rally up from here, and we could retest the upward trend line, not a problem. We could even retest the high Fibonacci area, the 328. But I think over time we're going to work our way down to this area, so we need to be a little bit cognizant of that, a little bit more concerned. And it has nothing to do with a rate change that may or may not change direction next week. Longer term, you could see treasuries, you could see changes in money flows in the market, but I still think that over time the energy sell side and the high will lead people to believe that the market has topped out, and it'll kind of put a little bit of an overhead resistance level in the market that's stronger than the under supporting of the market on the pullback. So it's simple time and energy. SPY, same thing. I mean, there's no change in direction there in my opinion, versus the other two. I think it's the same thing that we're looking at. Maybe like a 6 month on that, and you can kind of see that it's a very similar type trend chart. This is actually Heikin-Ashi, so I think we're going to pull further back down here. I don't like the Heikin-Ashis for chart visuals, but you'll be able to see that I do believe we have lower prices, but I do think that this is going to hold up better than the triple Qs and the IWM, because this hasn't had that extension that we've seen as far as the speculative bubbly type move in the triple Qs and the IWM. My trend line's off actually a little right there. I'd probably run something like this actually. So I'm looking for lower prices on here as well, but I'm not looking for the type of shakeout that we're going to see in the triple Qs and the IWM. I believe the IWM is the most vulnerable here, but I liked it the most on the way up. So it's had a massive run. I just think the higher you extend within these channels, that the intermediate channel line starts to lose ground, and these little humps start to work their way down this way for the longer term trend. Let's get into stocks really quick. NCLH, I know my son did a piece on that. I don't like Norwegian Cruise Lines for a few reasons. I believe they've added a lot of stock to their float. I believe they, if I'm not mistaken, they diluted themselves by about 45%. So think about it. At 100% capacity, the company would have to double their earnings basically to get the same type of move we see in the stock over time. So, given the amount of liquidity they have, I think they're burning 190 million a month, if I'm not mistaken, just having ships sit there. And their startup date, there's a lot of overhead in this stock. A lot of overhead. In fact, the other day, I don't know why this is not showing up correctly. If we look at 15-day, 20 minutes, I believe, we did hit a 50% retracement, and I talked about this stock in the morning that I'm a seller here at the 33.2, I believe it was, 33.15. I'm a seller. I actually hit that in pre-market, and I got out of position in Norwegian. I do believe this is capped here. I know my son has a lot higher stock price targets on this one. I kind of think we're going to be range-bound on Norwegian Cruise Lines. I'm not going to get into all the fundamental details, but when you look at the numbers of the flow, you look at the earnings potential. I mean, the bookings The ships that they had to they're no longer going to be super active, ramping the ships back up. The amount of money to spend to get the ship ready under the new guidelines. It's just I think it's more of a speculative perception by saying that wow, this stock, if you look at it over, a 4-year period, has come down so far. And I get it. Everybody wants to buy the bargain. So what I did was I ran the last area before the breakdown pre-COVID, and then obviously the bottom is your 0%, and we just basically did a 50% Fibonacci retracement, almost to the penny. When you zoom in, we saw that a few days ago, and that's it. I mean, I think that's where your energy lies. Can something change between now and then? Yeah. See, we touched it right there, and that was pretty much it. So I think that was the exit. Can we stretch back above there? Yeah, but I think we're, like I said, we're range bound. I think the fundamentals don't support it. The earnings potential based on the amount of shares that are outstanding right now, the payback due on some of this borrowing they did with high rates is not going to be that easy to get the kind of free cash flow they saw before the pandemic, especially when they're not running on all cylinders here. It's just a simple math equation. I mean, how's the stock going to get back up to its previous price when it doesn't have the potential earnings that it did, and when it has the, lower margins and more stock shares outstanding? Just to equal that move, like I said, you'd have to double your earnings. So not a big fan here at this level. It already completed the 50% retracement move. I think you should have taken profits at 33.15 and stepped aside on the stock. Fisker hit my price target the other day when it was at 20. I said price target was 26s. Obviously, we got some fundamental perception news that pushed it higher. And now where do we go from here? I like the chart on the daily, the 1 year. I think it's more of macro market perception here than anything. Let's just clear all this bullshit out. And that is a nice move, man, on big volume. The fundamentals of this company are pretty solid. I like the renderings, at least on the product that I saw so far. And I think some of the relationships they've made, I know there's news out the other day, I forget, was it Foxconn? I can't remember who they partnered up with, but fundamentally this one looks good. BYDDF is my favorite. I do like AYRA, was it, or AYRO? They're more in the utility, AYRA. They're more in the utility EV sector, I believe. I kind of like them, and I like QuantumScape. I just think QuantumScape has had a massive bubbly run to the upside, and I think you'll be able to buy QuantumScape. I hate to say this, I think you'll be able to buy it in the 40s. I really do. Like I said, time and energy. In fact, you could buy it even lower than that. But like I said, these things don't just happen overnight. Look at Plug, the moving PLUG. This looked horrible technically in this area. I didn't like the way the bodies of the candles are starting to break below certain trend lines, and you couldn't get a curl on the MACD. I'm not going to put in all the technicals here, but earnings came out the other day. They were worse than expected. The stock actually acted very well intraday. It wasn't really a great short candidate. It looked like possible short covering. I was kind of watching it intraday hit certain levels that I can watch Fibonacci, trend line levels, energy levels. And I was surprised to see. I probably should have bought this long because it just didn't. It was going against the grain of the market. It looked strong. And when you see that area break, you can play these little levels in here. So I don't know if that was short covering or just buying, sell the rumor, buy the news on the stock. But we'll see it sort out over time here. Plug, not my favorite. I actually like fuel cell more in that sector. One SPAC that I did like that I want to mention here, interesting setup here. I like the management. I like the fundamentals. I like everything about it. Is NPA New Province. I like where it's at here from a risk reward level. I like the trajectory of this little trend line here, basically touching the other day and then closing above my 23.6 Fibonacci retracement at the $14 area. So I kind of think this one looks interesting here. I think the risk reward is in your favor versus the macros of the market. I mean, that is a big move down. We've had a total retracement here. So I think you can take a small position in here. Wouldn't be surprised to see this break back above 16. I think the risk reward is in your favor. Could we get down here again into the 12s? Yeah, but I think the energy is going to really slow it from any precipitous drop once you get in that area. I think you're going to see more sideways consolidation, just ready to generate more power to the upside should some news come out. So Fisker hit my price targets, but I still like it. What else do we want to look at? Workhorse, I would avoid that. I don't know if any of you guys are in this. This chart looks horrible. Absolutely horrible. I know they lost a big contract to Oshkosh or whatever the heck it was. I thought Oshkosh made baby clothing. But not so great looking chart here on Workhorse. And I forget who that crazy lady is, Kathy or whatever her name is, came out and said she's buying it. It's probably more of a reason to sell it. I'm not a big fan here. This is an ugly chart. You are creating, even if we look at the after hours, if you look at the little pivot here, why is my thing not working? We're creating a little bit of a trend line here that looks like it's ready to break. I don't know, you have this little bounce, and it looks like you're kind of ready to roll through there. I always say first bounce, best bounce. So, I don't know, this one's a little bit of a neutral, kind of worrisome chart, the way it's acting. I mean, to retrace from this candle all the way down, I mean, if you just ran a fib on that candle alone, and I hate to do wicks on it, but, I mean, you really gave it up. You really gave it up here at the $17.34 area. I mean, the bears are definitely in charge of Workhorse. I know it's going to be news sensitive, but real no candle closes above that 1730 area, and then we're just kind of in this drift. You know, everybody's like, oh, I need a bargain, you know, and the buying energy is tremendous when you hit certain levels. And then news comes out, and it's like, why are these guys not holding? They have no conviction. So I would avoid Workhorse. My price target on Workhorse, y'all probably going to think I'm crazy again. Like I said, it's probably going to take time. Probably somewhere in the $7 or $8 area. And then I'm going to get a lot of flack for that. $7 or $8 in the Workhorse area. And then I got to make a few phone calls. I got to get my money back on SOS. CCIV, I kind of like it, but I think it needs to sell down. Once again, is, you know, the macro markets are going to dictate the movements. Where do I think this can go to? I don't even want to speculate. I do like the company. I don't want to comment. You know, these are tough charts when you look at them. They have a lot of price history. These are new issues, new specs. I mean, you do have a move from $9, right, to $65. Let's run it real quick. We're gonna go to candle bodies. We're not gonna. I mean, I kind of think we should probably pull back a little bit depending on the market. Now, remember, the macro markets can really change everything. If we start to do exactly the opposite of what I'm thinking we're gonna do, these stocks could really start moving back to the upside. I don't see that happening. I have to give you my opinion. I'm not going to play wishy-washy. I think we go lower. I'm not going to say, you know, oh, we could do this, we could do that. I do believe we go lower. I think this is probably range bound. I think CCIV will kind of stay somewhere between, I don't know, 26 and 35 for now. Longer term, it's depending. If my move that I think is going to happen in the market happens, I think you can probably pick this up in the 23s, 24s. If the market rockets to the upside, I would probably exit my position here 42, 43. Longer term, could be a really bright future for CCIV. Who knows? Could be a $100 stock. But what I'm saying is just looking at energy right now in the shorter time frames, given the volume ratios that I'm looking at, the news, the macro markets, I tend to be a seller of strength rather than a buyer of weakness just for now. And we'll revisit some of these things later. SOS, not sure what I'm going to do. I would like to see the company come out with some type of formal reply to the Hindenburg report. I don't think Hindenburg's that credible anyway. And it would be kind of funny if the Reddit Wall Street Bets crew decided to jump on that and squeeze. But I would guess, and I haven't checked, I would have guessed that if you guys do some due diligence on SOS, you're going to probably see a big drop in the short count on SOS. I think those guys covered their position. It acted like an intraday. That's all I'm saying. So that doesn't mean the stock's just going to rocket to the upside. In fact, I kind of prefer larger short positions. Obviously, i.e. GameStop. Let's look at GameStop real quick one more time. So GameStop, what did it do? It basically, I know there's a lot of guys that haven't been in the stock market and they think that things just go up forever and that this had the potential to do 600s in my opinion. I've given my opinion on this one, but I said that Monday where we broke down, I believe it was February 1st. I said that it needed to regain a certain level, if I'm not mistaken, or it would completely collapse, and it kind of did. But then I thought it would kind of hold the 150 area, I believe it was 146, 147 area, and it didn't. And now you can see we have a complete retracement. So what did we do within the context of that recent move? Really did nothing but a 50% or 38.2% candle body Fibonacci retracement. There you can see it right there. And now we've kind of broken down. A lot of guys are going to say this is just beginning of a bigger move. I always say first bounce, best bounce. Well, this is your first really big bounce. And that's probably your best bounce. So I know a lot of guys, diamond hands, everybody thinks this is going to go back up and I'm going to get a lot of bullshit. Is the structure the same with respect to the options to give us another squeeze? I still think there's a huge short position in here. But like I said, it's all about time and energy. And you had a chance here to continue to squeeze, but you made a lower low on the daily. So my opinion on this, I don't know. It's hard to say. I would expect $75. Price target $75 on GME. Sometimes you gotta just put your balls on the table. $75 price target on GME. The most I think you're gonna get out of this is maybe 219. And I don't see that happening, but that would be top 219. So we'll see. $75 price target, intermediate term, GME. I'll talk to y'all later.